Good day, ladies and gentlemen, and welcome to the show. Today is Monday, the 8th of March, 2020. Thank you for tuning in, guys. Now, listen, let's get started right now. Let's open up the charts right here. Just a second here. Click off of this. The SLF is possibly coming to an end at the end of March here, on the first day of April. I'm watching this very carefully to see what the Fed's decision on this is going to be. It says you might not know it, but there's another SLF cliff looming at the end of this year, end of the first quarter of this year. The supplementary leverage ratio seeks to impose liquidity and capital charges, especially on the largest banks, because institutions like Bear Stearns and Lehman Brothers have figured out how to manipulate the SLF's predecessor capital ratios, disguising otherwise risky assets as safe, using perfectly legal means, including instruments like credit default swaps. Global banks everywhere manage to make the most efficient use of their balance sheet space. So what's happening is if this SLR ends at the end of this month, and the Fed's going to decide on it, we could see a rather stiff market drop. That's basically the size of it. But the market's being buoyed right now on all the stimulus. I mean, they're getting drunk on it, you know? And so I'll tell you what my take on it is. I think they're going to extend it. I think the Fed's going to extend it come the end of this month. But we haven't heard the decision yet, or exactly what they're going to do. Now, here's another thing I want to talk about, too. You see all these stories out there. Now, this one comes from Zero Hedge. It says they're too busy front-running inflation right now. Nobody sees the deflationary tsunami that's coming. And they talk about this deflation, this huge deflation that's coming. I'm going to tell you, it would. It's ready to happen. Any withdrawal now from the money printing and the money creation would bring a huge deflation. And in a deflation like that, dollars would disappear, like they would just vanish, because the dollar is nothing more than a debt instrument. They've created all these dollars from debt, and they have to keep expanding the debt in order to keep creating dollars. Otherwise, the dollars all evaporate. So they can't let it happen. And because the whole system would basically just completely collapse if they let deflation get away. And, you know, they're not too worried about deflation. The deflationists are the guys that are worried about deflation right now. The Fed and these big boys up there, they're not worried about deflation. They know they got the endless printer. And they know what they can do to deflation. Ben Bernanke, Fed chairman, he was the one before Janet Yellen came in. You know, he said it best. He said, if we have to, we will dump money out of helicopters. They can create endless amounts of it. Of course, as they create it, the debt keeps going higher and higher and higher. And that's what we see happening. They're creating it. They're holding back the deflation. The debt's going higher and higher and higher. So what does this lead to in the end? All this creation of money. It leads to there having to be a default. In the end, there has to be a default. There's no way around it. The default's coming very soon because they're creating more and more money to try to keep up. So what's the default going to be? Well, they could let the system deflate. That would be a default. And they would have to renege on all of their obligations. Treasuries renege. They'd have to renege on Social Security. They'd have to ain't gonna happen, guys, because it's not politically it's like drinking a cup full of vinegar. It ain't gonna happen. Politically, it would just destroy whoever did it. That's deflation. So they're just going to keep kicking the can, create more and more money. So I said a minute ago, there has to be a default. How they're going to default is is they are going to destroy the purchasing power of the dollar. That's the default. The default's the inflation. That's how they're going to do it, because they can keep pushing this thing off and pushing it off. And there's never really a hard default. It's a soft default that takes a long period of time, and nobody's held responsible. And this is exactly what they're going to do. And they're already doing it. And the stock market is the first to hyperinflate. It's hyperinflating right now, the stock market. The dollar's going to be next. And once all these deflationists realize that, hey, you know what, there's never going to be a deflationary tsunami, because they're just going to keep printing and they're never going to let it happen. Once they realize that, once they all start to have to make that sea change in their minds, that it's going to be inflation. Right now, there's a big question mark. You got half of them out there thinking, hey, deflation's coming. You got the other half of them out there thinking inflation's coming. And they're both at odds with one another. The deflationists are trying to hold dollars, and the inflation people are thinking, hey, Bitcoin. They're thinking, hey, gold. They're thinking, hey, silver, you know? Both sides are trying to hedge against what's coming, this tsunami. They see a tsunami coming. They're both trying to hedge. They're both trying to preserve their assets. Once they all realize that it's going to be the inflation, then you're going to see the deflationists dump those dollars and try to get into gold and silver and cryptos. Of course, they're going to have to pay a lot more, because they were the losers in this. The winners in this were the people who knew it was going to be inflation from the very beginning, and they stayed true to what they knew was going to be true. You know, they're going to be the winners, because they're not going to stop. You tell me what politician out there is going to stand out there and do the right thing, which is to let the system... they didn't do it back in 2008, and it was a lot easier to do it back then. Now it's just impossible to do it without having the system completely collapse. You tell me what one's going to get out there and put their neck on the line. None of them. They're just going to keep printing. It's already set in motion. We just got one, for crying out loud, for these deflationists who are saying, oh, it's coming, the big crash is coming, and I'm going to hoard my dollar. You tell me one of them that can't see that there was just right now 1.9 trillion more dumped in to the system. 1.9 trillion more. That's the way it's going. It's going to keep going that way. Okay, enough soapboxing. Let's take a look now at silver today, you know. And this is pitiful. This is absolutely pitiful. With all this money printing out there, you know, silver and gold can't get their head above water. And there's a reason for this. It's these paper contracts for silver and gold. You know, they're able to manipulate the price to the downside using these. They create far more paper silver than there is real silver out there. And they do the same thing with gold. So it makes it look on paper like there's tons of silver everywhere. They keep the price down, you know. And sooner or later it is going to break free. But only when the real inflation comes, you know. And you say, well, Glenn, when's the real inflation coming? I'll tell you when it's coming. It's coming moving toward the end of this year, moving into next year. We're going to see real inflation start to hit, really bite. And I say real, you guys are probably saying, well, there's already real inflation here. You haven't seen nothing yet. You haven't seen nothing yet, you know. In 2023, I think, is when the real hyperinflation is going to hit. In 2023, you know, and you got a little while to prepare for it yet. You know, right now we're already in the first parts, the initial early stages of the acceleration phase, which generally lasts from 6 months to like 2 years. That's typical. Okay, I'm marking it 2023. We're going to go into hyperinflation, the real McCoy, and it's going to be devastating, especially to people who are all in dollars. You know, and even the people who are not all in dollars, it's going to be devastating. You know, and in what way it's going to be devastating is your salary just ain't going to keep up with the rate of inflation. Your work salary and your dollars in your bank account aren't going to keep up. Yeah, sure, your silver might be going to the moon, you know, or your gold or your cryptocurrencies might be going to the moon. But your salary and all your other expenses in life, your food and everything else is going to be going up so high. You're going to need that money that comes in from that you're going to get from the from your other alternative assets. You're going to be glad you have them. Anyway, so 25.17 for silver. Let's take a look at gold today. 1681. Look at that. They're knocking the price of gold down even lower. You know, they're putting it on sale for you guys. Instead of being mad, you should thank them for putting it on sale right now. You know, they're helping you. And remember, only don't go in for these paper stuff, because it's all, they can just settle it with dollars. And if the dollar starts to become worthless, you know, you want to hold it. Hold the real McCoy, you know. Cryptocurrency today, 1585 billion for the crypto industry, with a Bitcoin price of $51,000. And we're looking at the other coins are doing good too. Ethereum 1735. I hear Ethereum probably going to go up again pretty soon, higher. We're looking at Binance Coin at 235, Cardano at 112, Polkadot at 34.30, XRP at 47 cents. You know, that's pretty good for XRP. Uniswap. And there's old Litecoin down there at 186 bucks. You know, undervalued coin. Anyway, let's take a look now at the Dow Jones Industrial Average today, and what we're seeing is up 451 points. It's hyperinflating. The market's hyperinflating. And you know, when they're destroying the purchasing power of the dollar, it's endless how high the market can go. But it's priced in dollars. And, you know, if you were to take a sample of what the market would buy right now, and say the market goes to 100,000 or 200,000 or a million, doesn't matter, it's probably not going to buy as much as it buys right now at these lower valuations. Its actual purchasing power. So the market is actually crashing, even though it's going up. It's crashing in what it'll buy you. You know, because right now you can go out, you can buy a new car for like $25,000. Well, that new car is going to go up to 50,000, and then 100,000, and then a million. You know, and the market, you know, it's probably not. It's going to go up a lot, but it's probably not going to keep up with the inflation. Gold and silver, though, they're going to keep up with the inflation. At a certain point, they're going to break free of this manipulation, and it's going to be a massive move to the upside once they break free. And cryptos has already seen that massive move to the upside, but gold and silver haven't. You know, and they're going to explode to the upside, and the people it's going to be a sudden sort of thing. It's going to be like almost like a revaluation of gold and silver, and it's coming. They're not going to be able to hold it back. I mean, they're barely able to hold it back this time, and they were running out of silver. Next time, that's going to come back with a vengeance. And they are going to they almost ran out of silver this time. Next time, I think they're going to run out of silver. I think silver's going to be the weak link in all of this, because there's not enough physical silver to supply industry and supply this bloated, it's just growing. It's like a loaf of bread when you make bread at home, you know, and it just keeps swelling and swelling and swelling and swelling. That's what's going to happen. You know, and they're not going to be able to control it. And it's going to suck up all of the physical silver. And they're going to have failures to deliver to these, and you're not going to be able to buy the stuff. While you're going to watch the price going up, and you're going to be desperate to buy it as a hedge. You're not going to be able to buy it. You'll have to just buy crypto and settle yourself with that, because you're not going to be able to get gold or silver. We saw it happen this time. I mean, I went and looked at the silver and gold dealer, local one. Now they got inventory again. But, I mean, for about 2 weeks there, they didn't have nothing. Next time this comes back, they're all going to be cleaned out. You go to Acmex, everything gone. You go to Kitco, everything gone. You name it, you know, your favorite, one of these online retail silver or gold sellers. You're going to go there, and everything's going to be stripped clean, and it's going to stay that way. You ain't going to be able to get any. So you're going to have to buy Bitcoin or cryptos. You know, and that's what's going to happen to everybody. And the people that do have it, the gold and silver in their own possession, they're going to be sitting back there smiling as they watch the price shoot to the moon. That's coming, right? Okay, Dow Jones, and now we're going to take a look at crude oil, and it's off. It's been falling. The 65.27, it's down 82 cents on the day, or 1.24%. Now, the move index is right at the point at 69.37, and it's up 1.24 points today. It's right at the point where there's almost instability in the credit markets. 75 is the point where the instability begins. And, you know, once it passes 100, then you're starting to get into some real serious instability in the credit markets. You know, this thing was running in the 40s. Now it's up around 70. It's not that far to go to be 100 or pass 100. The Fed watches. This is what the Fed watches, and they watch it like a hawk. Bonds and rates today. We're looking at moving up in the bond yields today. And there's a couple things that's causing this. One of the things that's causing this is the influx of money coming in. The new stimulus and everything else, you know. And the threats of inflation. And the next thing that's causing it is the SLR, you know. Whether they're going to, a threat that they might not renew the SLR. And this is causing bond yields to continue to rise. We have to really watch and see what they do with that SLR. Let's take a look now at the U.S. dollar index. And the dollar's been creeping up today. 92.31. And I'm thinking to myself, you know, that this is the last hurrah for the dollar. The last great hurrah for the dollar. And I'm thinking to myself, will it pass 93, 94? Will it? Will it be able to have enough steam? Okay, thank you guys for listening to my show. Like and subscribe. Give me a thumbs up, and you know what? We'll catch you guys in the next show. Bye-bye.